Welcome to Protiviti's Board Perspectives, where we go inside C-suites and the boardroom to talk about today's most pressing issues and their implications for tomorrow. I'm your host, Joe Cornick, and our guest today is Jeff Newcom, Chief Operations Officer for Old National Bank, a regional bank with substantial assets based in Chicago and Evansville, Indiana. Jeff is also a board member and board committee chair, Human Resources for Chicago's Community Investment Corporation, a nonprofit providing mortgage financing to buy and rehab apartment buildings. Today, Jeff will be speaking with my Protiviti colleague, Managing Director Dave Petrucci. Dave, I'll turn it over to you to begin.
Thanks, Joe. Jeff, thanks for joining me today.
My pleasure.
To start, let's talk about the Chief Operating Officer role and how it's been evolving in this rapidly, changing environment today.
Yeah, it's definitely changing and evolving quick. I think most organizations and COOs probably over the last 15, 20 years were highly focused on things like automation, process improvement, operating models, and with technology and AI and innovation, that's just moved at lightning speed. And so it's a lot of the same types of things. It's just a lot faster. And so where I spend a significant amount of my time over the last year and a half is really focused on, do we have the right tools and technology? Do we have the right people? And do we have the right processes to make sure that when those technologies evolve, we can take advantage of those and capitalize on that in an efficient and effective way?
That's great to better understand. Turning a little bit to interactions with the board, what are board members asking of you today? And are you seeing changes in how they engage with you as a COO?
Yeah, and I think part of that is, our industry, right? So we're a mid-sized financial institution, a regional bank in the Midwest. And so a lot of our board's focus, at least recently, obviously, has been around things like AI. But outside of AI, a lot of the questions are really around scale. Do you have the right infrastructure? Do you have the right operating model? Do you have the right people to scale? We're a very competitive industry. There's a lot of mergers and acquisitions and partnerships that are going on. And so as those present themselves, you need to be flexible and adaptable and able to scale. And so we spend a significant amount of time with the board talking about those capabilities to do that.
Well, that's good. And I know, as we've spoke, scale is a key item. And so, that's good that the board is engaging in at that level of discussion. Back to how you're addressing the board and your key messages, are you positioning things differently than you might have, 5 years ago?
Not materially. I mean, there's definitely new topics and current trends and things like that. But I think the old tried and true of people, process, and technology are the three things that if you've got that focused in on, and from an operations standpoint, we really try and take those three components through the lens of the client and how does this impact the client. And I think where we're starting to see in the financial services industry, which is probably a little bit slower than a lot of other industries from a client demand and requirement standpoint, but we are starting to see more and more clients want to consume our services in different ways. And so they're still brick and mortar, and that's still very important, but we find that there are expectations that people and our clients want to be able to self-serve. They want to be able to get answers to their questions really fast. They don't want to have to wait until the branch is open to go do that. And so with those expectations, we in operations have to evolve our capabilities to be able to get not only the information, but also solve their problems in a very quick and efficient manner.
Thanks for that. By the way, after COVID, we've seen boards engage in different ways. When we look at, their involvement, especially from an operational standpoint. It seemed like many boards got much more involved from an operations layer than, maybe more of a traditional governance layer. In your view, are you seeing where there are operational areas where the board might be reaching too far in and perhaps, maybe areas some that they shouldn't be involved in?
Yeah, I don't know. I mean, of course, our board doesn't do that stuff. But, but I will tell you, I think it depends. I think your point about COVID, it depends on the environment and what's going on. And I think the best boards will learn to flex. And when there are moments of crisis or there are moments, I think back to, my board interactions during the financial crisis and how that went. And so I think when there's certain events in the environment, those, focus areas tend to evolve and change. And I think, at least in our board, we're seeing a lot more discussion and a lot more energy and a lot more time because, listen, public boards, they don't have a lot of time. There's 4 quarterly meetings. Maybe there's some committee meetings that happen in between that. And so you have to make the most out of the time that the board has. And it's definitely shifted to more strategic, more to scalability, more to automation, more to infrastructure. How do you ensure that you have the right resources and the right focus to make sure that you can deliver on your current delivery model as the environment changes and the customer demand and expectations change? So it tends to be a lot more around people, process, and technology and infrastructure than it does, metrics or detailed management report outs than I've seen in history.
So to the other side of that, right? Are there areas from an operations standpoint where maybe the board isn't engaged enough and you could use maybe more guidance, more oversight, more input, from that board perspective?
Yeah, high performing boards are just very, very valuable to people like myself and other executives in our company. And the reason is they have that broad exposure and different, lenses that they're looking through that they can bring into those conversations. And so if you're talking about individual metrics or KPIs or KRIs, that starts to become more of a compliance exercise and discussion and conversation. But when those boards are really focused on people and capabilities and strategies, then it gets into a lot more value added from those board members because they have those same perspectives, maybe in different industries and in different lenses, that you have more of a dialogue and discussion rather than kind of a QC or review type role or responsibility. So I think if boards and board members can focus more on that, how is what we're talking about aligned to the 2 and 3 and 5 year strategic plans? Because most boards, like our board, focuses on a strategic planning cycle, and then how are you performing against that strategic plan that happens at a point in time in the year, and how does that evolve over the year? Then those, in my opinion, get to be more meaningful. I get more value out of the board members' opinions and thoughts in that discussion.
So I'm going to ask one more question, Jeff, and I think it's something that we're seeing in the news every day. You mentioned it earlier in the conversation, and it's AI, right? And there's a lot of different themes around AI and discussions, and the fear of it taking everyone's jobs, but that's really not the view of where AI is valuable. I would just say, could you give us maybe just a brief comment on, how do you and the board interact maybe more around, AI governance? How do you look at, AI from core areas of where it fits into operations, where it doesn't fit into operations? It's just a very high level.
Yeah, I think it's starting, you're right, with the governance, because this is still fairly new and we're in banking, highly regulated institution. So our risk appetite is probably lower on the curve than maybe tech firms or other industries. So we are spending more time talking about governance, opportunities, more structure, philosophical than execution at this point in time. We're doing more on the pilot and trying to understand and see if some of these use cases would work. And it's a balance between the cost of that technology and the ROI of those opportunities. And we see a lot of opportunity in AI, but scale does matter. And so they're not cheap solutions by any means. And so how do you balance those opportunities with the ROI that you get with those opportunities? And then really the customer benefit, as I kind of talked about earlier. How do we make sure that we are delivering solutions that our customers really want and value? And so those kind of legs to the stool, if you will, are what we're focused on. And it's more talking about it right now and thinking about it than it is execution from our standpoint.
Fair enough. Hey, Jeff, thanks so much for your time and insights today. We really appreciate it.
Yeah, I enjoyed the conversation. Thank you.
Joe, I'll turn it back to you.
Thanks, Dave, and thanks, Jeff. And thank you for watching Protiviti's Board Perspectives. On behalf of Dave and Jeff, I'm Joe Cornick. We'll see you next time.